Hi guys, in this video we are going to talk about how the taxes are levied in case of stock market income specifically for non-resident Indians. So if you are an NRI or maybe non-resident, in that case how the taxes are going to be levied in case you are having income from share market. Strictly we will be discussing as per the latest rules of Income Tax Act, and right now while I am recording this video it is March 2025. So it is going to be applicable for assessment year 25-26 and 26-27 as well. Okay, now I'll take you to the screen where we'll be discussing it. Now we are on the screen. So see, if you are having income from sale of shares, mutual funds or ULIPs, in that case there are going to be two types of capital gains. First is going to be short term capital gain, second is going to be long term capital gain. Now you have to determine the gain what you are having is whether short term or long term, and how you are going to determine it. For that you have to see the period of holding, that is the date when you buy it and the date when you sell it. So during this period, the period which is lying in between these two dates, you have to see how many months are there. If the shares have been held for less than 12 months, then the gain is called as short term capital gain, or if there is loss it is called as short term capital loss. In contrary, when the shares are held for more than 12 months, then this is called as long-term capital gains or long-term capital losses. Tax treatment is going to differ based on what kind of gain you are having, if it is long-term or if it is short-term. Okay. Now, what are going to be the tax rate in both the cases? Let's say if the gains are long-term capital gains, in that case, usually the tax rate is going to be 12.5%. Usually, I mean to say is after 22nd July 2024, the tax rate is going to be 12.5%. So there is an amendment. If you have seen earlier videos and if you are aware about the taxes, what earlier used to levy, that has been changed. Earlier, the tax rate was 10%, and this tax rate is going to be there up till 22nd July 2024. But after 22nd July 2024, that is the shares which are sold after 22nd July 2024, the tax rate is going to be 12.5% on long term capital gains. Also, one more thing what you have to remember there is the exemption is allowed in long term capital gains. When you are having long term capital gains, you don't need to pay taxes until the gains is up to rupees 1.25 lakh rupees. Specifically, I'm talking about share market income. Okay. So when you are having income from share market and the income is long-term capital gain and the gain is up to 1.25 lakh rupees, then the gains, the taxes are exempt. However, when the income increases from 1.25 lakh rupees, then in that excess balance portion, you have to pay taxes on that, and the rate would be 12.5%. For example, let's say if the long-term capital gain is 2 lakh rupees, then exemption is there for 1.25 lakh rupees, and for balance 75,000 rupees, you have to pay taxes for 75,000 rupees at the rate of 12.5%. Okay. Also, make sure the earlier this limit of 1.25 lakh rupees, it was earlier 1 lakh rupees. Now it has been increased after the amendment. Okay. Next is indexation benefit. Is there any indexation benefit which is available in case of long-term capital gains which is arising out of sale of shares? Answer is no, there is no indexation benefit. By the way, if you are not aware about the indexation benefit, it just means that you will get the benefit of inflation in simple terms. So is that benefit available? No, sir, that benefit is not available. Secondly, talking about the basic exemption, let's say the basic exemption limit, it depends upon old regime, new regime and all those things, but let's assume the basic exemption limit is of 100 rupees, and if your capital gain is of 70 rupees and there is no other income, can I say that because the basic exemption limit is 100 rupees and I have the capital gains of only 70 rupees, so I should not be paying any taxes on it? Can I say that? Answer is no, you cannot say that. Mind you, this basic exemption wala jo benefit hai, this is available for resident individuals, but not in case of NRs, non-residents. So if you are an NRI, so this exemption is not available to you. You have to pay taxes on it. Now coming to tax rates in case of short-term capital gains. Again, up to 22nd July 2024, the tax rate in case of short-term capital gain, it was 15%, and after 22nd July 2024, it has been increased and now the rate is 20%. Okay. So if you are having any short-term capital gains, you have to pay taxes at the rate of 20%. Unlike long-term capital gains, where you have benefit of 1.25 lakh rupees ka exemption, that benefit is not available in case of short-term capital gains. So in case of short-term capital gains, you directly have to straightly, you have to pay the taxes on short-term capital gains at the rate of 20%. And again, the benefit of indexation and basic exemption both are not available in case of short-term capital gain as well, just like long-term capital gains. Now, let's say if there are losses, what is going to happen? I'll tell you some of the tips what you can use to save the taxes in case of losses. So, let's say if there is long-term capital loss, uh, let's say if I have loss of 100 rupees and I am having income in the next year under same head, that is long-term capital gain of 150 rupees. So, if I am having losses from previous years, and let's say the loss was of 100 rupees, so I'll be able to say that because I have had losses in earlier years, now I can use this losses to set off against the income. So there is income of 150 rupees, there has been losses of 100 rupees, so I'll say the net long term capital gain income is of 50 rupees, and I have to pay taxes on only this excess amount, that is 50 rupees. So this is called the concept of losses and set off. But do remember, whenever there are losses, and if you want to take benefit of these losses in the coming years when you are having gains, you have to file your return before the due date. If you have not filed your return, you will not get these kind of benefits. Okay. And this loss, long term capital loss, can only be used to set off the income which is again in the same head, that is long term capital gains. Okay. Now, let's say if there is loss under the head short-term capital, that is short-term capital losses are there. In that case, the short-term capital loss can be used to set off the income in both the head, that is long-term capital gains and short-term capital gains. So you can use short-term capital loss to set off both long-term and short-term capital gains. But here also I would like to give you an advice that if you are having short-term capital losses, unless they are expiring, let's say this is just eighth year. What is eighth year? Okay, I have not explained you that concept. Let me tell you that concept as well. First is ki if there are losses, what you can do is you can carry forward these losses. If I have loss in the previous year, I can carry forward it to this year, which I can use if I am having gains in this year or maybe in the subsequent year. So for how long these losses I can carry forward? I can carry forward these losses up to 8 years. And you can only carry forward when you have filed the return on timely basis. Okay. Now coming back to again short-term capital loss. If you are having short-term capital loss, you can use this loss to set off against the income under head long-term capital gains or short-term capital gains both. Lekin you have to remember, if you are having short-term capital loss, I always prefer that you should use this loss to set off the income in short term capital gains if possible. If the loss are going to be expired because the 8 years, maybe the last eighth year is running and the losses are going to expire, in that case, it is okay that you can use it against long term capital gains as well. Otherwise, use it for short term capital gain. Why I am saying that? There are two reasons for that. First is in case of long-term capital gains, you get the exemption of 1.25 lakh rupees. That benefit is there, which is not available in case of short-term capital gains. Secondly, when short-term capital gains are there, you have to pay taxes at the rate of 20%. However, in case of long-term capital gains, the tax rate is reduced and it is 12.5%. So if there is short-term capital loss and you are going to use it for short-term capital gains, instead of paying taxes at the rate 20% on uh, short-term capital gains, uh, you will be setting off all that short-term capital loss against the short-term capital gains. And for long-term capital gains, tax rate would be reduced. That would be 12.5%. So straight away, there is 7.5% tax benefit is there. So you have to take care of these small things. Also, there is one more concept which can be used to make sure that your tax advantages are more. That is tax loss harvesting. या फिर tax basically booking the tax profits up to 1.25 lakh rupees. uh, so what it is, see, right now, let's say if I am having my shares in the portfolio and I am seeing there is long-term capital gains are there, but I have not booked it. What is the meaning of I have not booked it? I have not sold the shares. Shares are lying in my portfolio, and I can see that these shares have been held for a period which is more than 12 months. So these shares are long-term capital assets, and if I am going to sell these, there is going to be long-term capital gain. And if there is no other capital gain, I mean no other long-term capital gain, you can sell these shares and book the profits up to 1.25 lakh rupees, because you don't have to pay taxes on that 1.25 lakh rupees. Now you may say, what if I don't want to sell the share? Why would I sell it? Because there is, I'm expecting that these shares are going to rise further. So in that case, what you can do is you can sell the shares today, and maybe you can buy the shares after 1 or 2 days. In that case, what is going to happen is there's going to be a minimum difference in the price, and then you will be buying the shares again in the same price. So you are having first money coming into your bank account, and then again the money will be going, and you will be buying the shares. But in this process, what is going to happen is you will be having profits, and the profit are not going to be taxable, because they are going to be long term capital gains to the tune of 1.25 lakh rupees. So this one more tip you can use. And also one more small tip: if you are considering selling of some of the shares, always check whether they are short term or long term. And if they are short term capital gains, I mean short term capital assets, and if the period of holding has been maybe 10 months, 8 months, consider if you can hold for a few more months, so that they'll come into the category of long term, and then the tax rate would be reduced from 20% to 12.5%. So straight again you'll be saving on 7.5% of taxes. So that's it. I hope it was helpful to you. It has made you aware about the tax laws for non-resident in case of share market income. If you would like to know anything, if you want to book a consultation, or if you have any other queries, you can definitely reach to my team. The number maybe is showing on screen somewhere. You can use that, and you can reach out to us, and we'll be happy to help you. I hope it was helpful to you. Thank you. Bye bye.